Even with today's market pullback, our next guest warns Wall Street is still too bullish ahead of the CPI report. Danny Moses of the Big Short fame is founder of Moses Ventures. Danny, good to see you in person here at the NASDAQ market site.
Great to be here. Thanks for having me.
Are you net short in your portfolio? I mean, is that how you view the world?
I would say I'm not net long. I think there's opportunities. There's always opportunities on both sides of the equation. But the stuff I'm seeing right now, I think it's set up for short. So.
Okay. So what do you see happening tomorrow and what are your concerns?
I think the obsession with every print that goes by with all this economic data, whether it's 8.7, 8.4, PPI on Wednesday, whatever that might be, it's really about what's going on behind the scenes. And that's what's important. Earnings are coming down. Layoffs are starting to happen. Fed rates take a while to build themselves into the economy, and it's happening now. So we've seen peak earnings in this cycle for sure. We've seen probably the lowest rates in this cycle for sure. And what you guys were talking about earlier that really resonates with me is you would want to see 10-year yields now moving higher, not lower, because it's telling you something. So a 2-year, 10-year inverted by 50 basis points is telling you something. 2 negative quarter GDP growth is telling you something. And purchasing power is diminishing because the consumer is not keeping up on their wages with. So that's a bad witch's brew, as we say.
Witch's brew. He snuck in here, by the way. I'm sitting here looking at you. I turn around. He's right next to me. I will tell you, last summer, the only person talking about stagflation that I remember was Danny Moses. It's right before us now. So my question to you, Danny, with 2s, 10s going to 50 basis points inverted, there's no arrows in the quiver of the Federal Reserve to fight this. And they can say they're going to pivot, they're going to pause. But if they do that, commodities go back up and the inflation problem continues. How do they get out of this mess?
They're just, they're certainly going to pause at some point. But why would they pause? Is it because inflation's coming down or things just are stuck in the mud? I think it's probably a combination of both. I think we've seen peak inflation, but I don't know what they can do. They're unwinding an $8 to $9 trillion balance sheet here. So I tell people this is a little bit of the 70s, 80s, 90s, 2000s. It's all kind of mixed in, but there is no precedent for what we are seeing right now. And look what has already happened with the Fed having done very little. I mean, already the builders have gotten hit. You see what's going on in that sector. So the consumer is starting to feel it. And with savings rates where they are right now, where they've dropped, there's not a lot of margin for error here on the consumer side.
So you spoke to employment a bit earlier. And so what we've seen so far is the unemployment or the peaking of unemployment that we're seeing is more so in the tech sector versus, the spending power is really being challenged in the lower third of the consumer base. What is it that the Fed needs to see from an employment standpoint in that middle third to upper third to get the people that are clamoring for this pivot to have something to kind of hang their hat on?
Yeah, I don't think they care so much about the middle and upper third. I think Walmart customer and Walmart told you the day before the Fed went. I think part of that pre-announcement was to announce to the Fed, look what's going on. We're going to tell you right now the consumer is struggling. They're spending all their money on gas and food, and there's really nothing left. And so Fed is certainly watching that. That's going to have an impact. But there are layoffs occurring in the middle to upper now for the first time, and those are high-paying jobs, and that will have an impact, I think, on the market that we've yet to see. So this lag effect is now, I think, going to come around here.
So, Danny, you just said that investors are kind of whistling through the graveyard. What is that? Like the Big Short thing? What are they missing? Well, we just said the S&P just rallied 15%. That's one heck of a rally in a very short period of time, right? And so the NASDAQ, again, do you see today the market felt really sloppy? The NASDAQ was down 1.5%. But you know what? Microsoft and Apple were unched on the day, unchanged. It was keeping the S&P together here. So it really feels like, again, there's a lot of people calling for bottoms, that sort of thing. What are investors missing right here?
I think you can own the quality. I think you're going to see those stocks traded at a premium to the historical valuations because they're going to hide in them. These meme stocks, which I call obsessments, not investments, is really what they are. I don't even watch. I mean, watch them to indicate the health of the retail investor, but there's not healthy what you see. Those are not healthy moves in Bed Bath & Beyond, AMC, GameStop. They're just not. And we know where they're going to end, or at least I think I know where they're going to end in. And so you want to own companies with strong fundamentals. You want to own companies with good, solid cash on their balance sheet, not lots of debt, because that's a whole other area that we can talk about maybe on a different episode, is what's going to happen when corporations need to come back for paper to fund their balance sheets. It's going to be a lot more expensive this time around. So those are all things that have yet to come, and I think that's coming on the horizon.